Let's see what we have here. Give me 1 second. All right, let me share this. All right, good morning, guys. Today is Thursday, August 17th. As usual, doing analysis for US 30, gold, and EU. So yesterday we had a good winning day. We took one trade on US 30. We risked 0.5%, went for a 1:2. It eventually hit TP, and we took this during the live session. So yesterday made 1%. On Tuesday as well, the EU trade that we took on Tuesday hit full TP yesterday. Again, that was a 0.5% risk. So again, another 1%. I know last month we really didn't have too much trading because I was ideally on vacation this first week of July. And after that, we really did not trade for a couple of days. So actually, we only traded 1, 2, 3, 4, 5, 6 days out of the month. Well, I sent trades out 6 days out of the month. And but anyway, so looking at what we have today, so I did so for every indicator we have, I have included this section in here where under the SAR signals, you have the green lines and the red lines. So you have an option to pick what lines you want to trade with. So if you're looking for sells and you're not interested in the green lines, and this is ideally helpful, whether you're mostly for those people who are extending the lines, right? So like right here on US 30, and I know this down here is on the 15-minute. So personally, I am still looking at the daily bias. I am still bearish on US 30. I'm bearish on gold. I am bearish on EU. And you can see EU, we are testing this sell zone right here. And I'm still bullish on the DXY. So knowing that, so first of all, my entries are first off on the hourly and 4-hour timeframes. So on starting with US 30, we have this double SAR right here. It has like a 918, so about a 20 pip range. So we have this zone right here, and it's on the hourly. On the 4-hour time frame, I do not see any range. The next range on the 4-hour time frame is the one here, 35,048, but this is where we took the sell yesterday. So for today on the hourly time frame, or on US 30, the only entries are on the hourly time frame. So let's assume I'm only interested in the red lines, because for me, my bias is sell. I can turn off the green lines, and that way I'm only left with the sell zones, and I can trade that. But for me on the high time frames, like I'll leave both of them on. So on the lower time frame, so for example, EU is a nice trade I'm looking to enter, and hopefully we get the sell right here. You can see EU is rejecting from this double SAR on the hourly time frame. So if this current hourly candle, so this would be a test and rejection. So if this current hourly candle closes below these two red SARs, I will drop down to the lower time frame. So for example, you can see here, I've dropped down to the 15-minute time frame in my, and keep in mind this setting, you don't have to use the high-low plus trend indicator. So all indicators have this feature built in. So for me, I just chose this one. So whatever indicator you choose, just turn everything else off if you're only trading the SR or SAR zones, and just leave those checked. So for me, since EU, I'm looking for a sell, and this next hourly candle closes in 20 minutes, I turned off the green lines. So I'm only interested in the red lines, and then I went ahead and extended. So on the 15-minute time frame, where do I see an entry? So right here, if possibly, if this hourly candle right here, if this hourly candle is to close below here, like that's where my sell entry would be, if the hourly candle closes like around 1.09100. So looking at this chart, 1.09100 would be somewhere here, So this also would be a test and rejection of these double SARs. So if we do get that entry on the hourly time frame, this will be a short for EU. So either stop loss above the SARs you're trading. So this would ideally give you like a 11 pip stop, but I recommend, if you want to be safe, have at least a 30 pip stop. So 30 or 25. So because we can see this strong SAR right here, but in this instance, maybe a 30 might be better to avoid manipulation. So if you want a 1:2, that will be the trade, but the hourly has to close in the next 20 minutes. This hourly candle has to close below this double SAR, and it would qualify for a test and rejection entry. Gold, nothing really on gold. I'm still bearish on gold, but in terms of entries, I don't see anything. On the 4-hour, there's nothing. There's no sell SAR. Other than this single one that's down here in the hourly, there's nothing as well, other than this single one as well right here. So on gold, I don't have anything, but on the, overall, I am bearish on gold. I just don't have any entries to take with it. And that's, that's perfectly fine. You're not gonna get entries every time. US 30 on the other hand, so still bearish on US 30. On the 15-minute time frame, you can see if you want to do the extension of the trades, you can see on the 15-minute, we have this double SAR right here. So on the 15-minute, if you're to get 2 candle closures below 34,782, that would be a sell zone for US 30. Other than that, you have to wait for US 30, and here I can come in here and turn off the green zones. And keep in mind, you can also trade the green zone. So if you are bullish on US 30, this right here would be a buy entry, right? Because you have a double SAR for a buy, and you have this candle that closed above it, then you have the next candle that closed above it. However, right, keep in mind, if you take a buy right now on US 30, you're countering the daily time frame. So you guys remember here yesterday on the hourly time frame, right? I said that if this hourly candle closed above this green SAR, for anybody looking for a buy, that would have been a buy entry. However, you would have been countering the daily bias. So it's the same idea here, right? Because here for anybody who took buys, it was a valid buy right here on the hourly time frame, and it had even closed above a trend line. But you can see US 30 flashed all the way back down and then dipped from there. So that's the importance of knowing if you're countering the daily bias, don't use the same risk you're using if you're trading with the daily bias. Because here, for somebody who risks 0.5%, which is like ideally what you would risk if you're trading the daily bias, you'd have lost 0.5%. But if you followed like what I mentioned, if you're countering the daily bias, use half of what you'd risk, and you risk 0.25%, you'd have only lost 0.25%. So this right here, if I highlight this, this is a buy for you, for anybody. Again, for anybody looking for entries for a buy, that is a buy. However, keep in mind you are trading against the daily bias. Now, for me, since I'm looking for sales here on US 30, what I would do, I would come in here, turn off the green zones, because I'm not, right, keep in mind, I don't want to have conflicting trades. So I want to see, okay, so for me to sell US 30, US 30 either has to have two 15-minute candle closures below here, right? And again, on the major time frames, we are testing. So look at US 30 right now. We are testing a double SAR region right now. So for me, again, this is the hourly time frame. So what I would want to see, so I anticipate this to be a test and rejection. So what I mean by that is that I anticipate this candle to test this way, then I anticipate the next candle to come in here, come here, and then reject further down. So this is what I mean, test and rejection. So if I'm entering a sell and the sell entries are above where price is, that is the entry you'll get is a test and rejection. If the sell entries you're getting are below where price is, that's going to be called a break and continuation, because you're breaking to the downside and you're continuing that way. So for me, since I'm still looking for sells on US 30, I think the sell we are going to get for US 30, I think US 30 is going to push up right now slightly till, and you can see we have on the hourly time frame, we have this trend line to the upside. So in my opinion, I think US 30 will pump up, come in this zone and pick up that sell side liquidity and then drop back down. Now this zone 34,940, I'm pretty sure aligns with this zone right here, right? With that double SAR sell. So right now, the only trade we might get on the live session is this one for EU in the next 13 minutes. So you see what EU did right here on the hourly time frame. That's what I'm expecting US 30 to do right here, because here on EU, this is called a test and rejection, because it's testing this double SAR cells, and then both of them have closed below there. And also, right, you can refer to this as tweezer tops. So this is the entry I'm waiting for right here on EU. So since this is, and right, again, now is when you should start looking at, okay, we have 13 minutes to close. There's a high probability that this entry, that price will close around this zone. So this is where you start thinking, how big of a stop loss do you need? Because right here, you can get away with a 30 pip stop. But if this candle closes here, keep in mind, your stop should always be relative to the SARs you're trading. So for example, if this candle closes here, my SARs are literally just 10 pips away. So if my stop is like 30 pips, that's doable. But what you don't want to do is, for example, this candle to close down here, and then your SAR pips, your SAR entries or lines you're trading are like 25 pips away, which would be like 90% of your stop loss. So in this case, this is why I normally mention wait for that Judas swing back up and then wait for the trade right there. So if it closes around here, this is nice. Even better if EU pumps up a little bit higher. My only confluence right here is that I need this hourly candle to close below 1.0100. That is all I need. So I think that's the only trade we are going to get for US 30, unless maybe you drop to the 5-minute time frame, which might have an entry. So 5-minute time frame as well, we have actually a 4 quadruple SAR zone right here for sell. So right? Same idea. But for me, since I use I use the hourly entries and hourly and 4 hour time frames for entries, I would rather wait for the next 2 hours on US 30. So I'm not really going to push anything. As much as I do expect US 30 to sell, I don't want to I don't want to break one of my rules, because my major rule is I identify an entry on the 1 hour and 4 hour timeframes, and then I wait for confirmation on those timeframes. So right now, if I was trading US 30 right now, it would ideally just be scalping. So because I would be looking for 2 5-minute candles below this, because this is a quadruple. Actually, this one is a quadruple SAR sell zone. So if I got like 2 5-minute candles closing below this, then I would sell US 30. But right, for me, when I scalp, I tend to over leverage, so I'm not going to enter that. So today, the only trade we are probably going to get is this EU trade in the next 10 minutes. So once we get that, that will be it for the day. So for this trade, again, I'm going to risk 0.5% and going for a 1:2. So this one, you can get away with like a 20 pip stop if you want to have. So let's see. So this one actually I've marked up a 25 pip stop. So a 20 pip stop would be above here somewhere. So this one, you should be able to do a 25 pip stop and 50 pip TP. So that's what I'm going to mark up on my trade manager right now for EU. And if you guys have any questions, go ahead and ask. But 25 pips, 50 pips, and then I'm going to risk 0.5%. Okay, so we have like 10 more minutes before this closes.
Bro, can I ask you a question?
Mm-hmm.
Yeah, so you know the daily, yeah,
Mm-hmm.
the daily shows the overall bias, isn't
You said that the daily tells the overall
it?
bias, yes.
Yeah. So you know the daily, I'm now just a bit confused. When you said the daily and the 4 hour and the hourly, like, how do you see it, like,
Now
in your mind?
pick the daily to tell you your daily bias. So that's going to tell you you're selling or you're buying today. That's it. That's all the daily is telling you. Use the
Yeah.
4 hour and 1 hour to identify at least a double SAR. That's it.
Yeah.
Mark up those zones. So that's why you see, for me, I'm marked up the red zone. So for me, I know, like today, I'm not trading gold because I don't have any double. As much as I know gold is selling, I don't have any double SAR on the 1 hour. I don't have any double SAR on the 4 hour. So it's as
Oh,
simple as that. Yeah. So use the daily for bias, identify the area of selling or buying, identify the area of selling or buying on the daily, or I'm sorry, on the 1 hour and 4 hour, mark up
yeah.
those zones and wait for price to come there.
Oh, I see.
Yeah.
Oh,
And again, so you also don't have to use the 4 hour and 1 hour, right? For me, that's only what I've back tested because I'm trying to take fewer trades, but I'm pretty sure if we went to the 30-minute, you can find double SARs on gold for sales. Look at here, right? So on gold right now on the 30-minute, you have double SAR entries right here. Right. So for me, I just the higher the time frame you're getting your entries for, the lower the probability of you getting faked out, and the higher the probability of your strategy, or like for example, this strategy sticking. So for example, yesterday, wait, 7 more minutes before this. For example, yesterday, this is where we entered the sell on US 30. It was easy to look at it and trust it on the 4 hour time frame because the trade was right here. Where we entered was literally right here. And we can see with the 4 hour, the top was right there. But when we entered on the like when we did the entry on the 5 minute, the candles were moving. So at first we almost got stopped out. Like for me, I survived getting stopped out by like 2 pips. But then I also identified like a 15-minute time frame that was also safer. So if that's why for me, I like testing or trusting that the 4 hour and 1 hour, and then just using the smaller time frames for entry. Also, if you guys remember yesterday, personally, I don't extend lines on the now that at least we have the option to turn off whatever lines we're not looking for. How many more minutes? 7 more minutes. We have the option to turn off the lines we're not looking for. Previously, I wasn't extending the lines for the 5-minute and 15-minute time frame. So for yesterday, like I showed you guys, by yesterday we extended the lines, but without extending the lines, I showed you guys my entry that I could have taken for US 30. So if we go back, I said that I will, this is the trade we took yesterday. So I said I would have waited for a red SAR, a live one. So not, a live one, so not any from the past or anything, because when you extend, you are bringing SAR zones from the past also, so historical zones. So I said when I drop down to the 5 and 15-minute, I'm only looking to trade the live one. So same thing right here on the daily time frame. When I'm looking for bias, I'm not extending any lines right here. I'm only using the current, the most recent one. So right here for US 30, this is what I would have been looking to trade, but we didn't get that entry or that break and retest until somewhere around this candle. Because right here, this candle broke, but the next candle again went back up. This candle broke, the next candle went again back up. So I would have waited for this one, right? The live one. So the next time this candle would have been broken, which was here, and then the next candle retested and closed below. So if I wasn't trading with you guys yesterday, my entry sell for US 30 would have been here. That would have been my entry sell, but right, because yesterday the way we traded, we extended the lines and our entry was here, if I'm not wrong, somewhere here, and then I survived getting faked out by like 2 pips, and that was the trade we took, something like that. So right, there's pros and cons to extending lines. There's pros and cons to not extending lines, so you just have to backtest and see what would work best for you. So this EU trade again, so this is what I'm looking for. If it keeps dropping further down, I might have to increase my stop loss to 30 pips, because keep in mind, I don't want to be, if I'm taking a sell, I don't want to be so far away from the SAR cells that I'm taking, if that makes sense. So in the next 4 minutes, so this is where you should start asking yourself, okay, these are the SARs I'm trading. So this right here, these two, at 1.09145, 1.09116, those are the SARs you're trading. So how big of a stop loss do you need? So the more this hourly candle closes, the higher the probability that the distance between your entry and the SAR will be like a high percentage of your stop loss. So right now, where if this red candle closes here, which is what I didn't want, if this red candle closes here, our SARs will be about 80% of our stop loss. So this might be that instance where I wait for that Judas swing, because for me, keep in mind, I am bearish on EU, bearish on gold, bearish on US 30. So if this is the case, I might just wait for a retracement, which is that what I call a Judas swing, right? So if you can survive, if based off of your entry, you can survive, you think you can survive such a big stop loss like this, where the trade might come 80% to your drawdown, I'm sorry, 80% to your stop loss, go ahead, and this is a valid trade. Also, if we go to the 5-minute, again, I really don't want to extend this line. So you guys can extend them if you want. Personally, on the 5 and 15-minute, I don't like extending lines. I like trading the live SAR zone. So here on the 5-minute, this would be my entry. I would wait for 2 candles to close below here, and then I would enter there. But personally, this is a valid trade. Let me see, maybe 30. I know we have 2 minutes. I just hope this trade can push back up. I like having like nice tight stops, because keep in mind, with this strategy, you want to have like a 1:2 risk to reward. Yeah, I just don't want it to keep pumping down. That's the only thing. Anyway, we have 2.5 minutes to go, but I just hope that in those 2.5 minutes, it closes a little above where it is right now. All right. So hopefully you guys, right, you get the basics. So what I try to give you guys is not, right, is not the holy grail. So you don't have to, right, So keep in mind, this is a valid trade. So just because I'm not entering, or I would not prefer to enter it here, does not mean that it's not going to go to TP. Again, keep in mind, our daily bias is a sell. The question is, what's the probability that you'll get stopped out with having entering there and your stop being above there, and then the trade going back into profit, right? Same idea here from yesterday. Was the probability yesterday, because we extended the lines, right? Right, I just showed you guys the two entries. The probability for the trade we took, ideally because we extended the lines right here for that trade, you can see how close we came to getting stopped out. And here I could have gotten mad at myself if I got stopped out of this trade, and I was like, okay, normally I trade on the 5 and 15 minute, I wait for break and closure of the live one. So I would have been mad, because look at what I would have gotten if I had just waited for this. But luckily I didn't get stopped out. But that's the idea I'm trying to give you guys. So for this trade, what you don't want is to get faked out and then you're like, oh, I should have waited for that retracement right here. So this is a valid trade. If you can do a 50 pip stop, then good for you. That would be good. But that would mean you're going for 100 pips in order to have a 1:2. So personally, I will wait. So hopefully we get that retracement during the live session. So let's see how this candle closes in the next 40 seconds. So for me, I'll put this one right here. So it is a valid trade.
How I feel about gold right now. I'm gonna try to wait for it to retrace back up a little bit because I think I missed my entry for that sell.
Yeah, yeah. Personally, for me on gold, I don't see any trades. I mean, on the 4 hour and 1 hour. But if you're trading, yeah,
Just based on my trend lines, 'cause I've been watching those on gold. It broke out, then it broke back under and closed under on the 15 minute. So I'm
yeah,
pretty
yeah.
confident that it's gonna drop, but it's way past the trend line for me now. So I'm not gonna fuck with it.
Yeah, gold is definitely selling. Like even right now, this right here, if you're trading this, this would be break of a triple SAR, break and continuation. So this is an entry for gold. However, right, same thing. For you to survive this trade or that retracement, you'd need like a 70 pip stop. For you to have a 1:2, you'd need 140 pip TP. So again, same idea here. If you're entering this on the 15 minute, I would wait for gold to come back here, and that way I can have my stop protected by all these three triple, quadruple SAR sell zones. So same thing, I'm guessing EU just closed. So that is a valid trade, but personally I'm not entering. I will wait for a retracement on EU. If it doesn't come, then it is what it is, right? So this is also where journaling comes in. You journal your trades. You're like, okay, for this particular trade, if I had waited for a retracement, would I have gotten tapped in? If not, then you journal that. You say on this and this date, I got a valid test and rejection on EU. I tried to wait for the retracement a little bit up, but it didn't, and the trade went all the way into to take full TP. So maybe next time, if for example, personally, I'm not tapped into this, maybe next time I'll just say it is what it is. I'll just enter it, because previously I've back tested and I've journaled that the trade went to full TP. But anyway, so yeah, so there goes US 30. And this is ideally the discipline, right? For me personally, I don't see myself taking any trades on gold anytime soon, because all my entries are based off of 4 hour and 1 hour. So US 30 is telling me, right, I might still be forming this test and rejection for you on the hourly time frame, but give me a couple of hours. So right now, this is where I need to watch US 30, because we already tested the first SAR literally to the pip right here. I already tested the first SAR. So give me, in this 1 hour, I'll try and test this SAR for you. If I break above, if I close above this sell zone for this retest candle, for this rejection candle, the next area you can wait for sales is right here. If I don't give you a valid entry right here, the next area you can enter is right here, so long as the daily remains bearish. But US 30 is telling me, give me 57 minutes and 30 seconds, and I'll give you an entry for US 30, or I will invalidate the entry you're looking for. So ideally, that's how I'm doing the markets right now. Honestly, like yesterday, it's only those two trades I took for the US 30 sell we took. Today, I haven't taken any trades until I get that proper confirmation. So I really don't want to be trading just for the sake of trading, right? So if you think of it, same thing as your job, right? For most people, I doubt if you're working, you're always on your computer waiting for your right, for your boss or your manager to assign you tasks, right? So if you want eventually to do trading as a full-time gig, you cannot be trading or looking to be trading every day. So let the market show you, okay, here's your entry, take it. So not for you looking at, okay, where do I need to enter? So for me, EU, I'm not in EU, and my entry for EU is going to be up here. Now, if this trade, which is a valid trade right now, goes straight into profit, then I'll go ahead and journal and say, okay, on August 17th, 2023, I had a nice test and rejection. It didn't come back it didn't form a Judas swing to come back and tap me in before dropping. It went straight into profit and without even any retracement. Then I'll come here and see, okay, why did that happen? Why do I think that happened, right? So I can come here, look at the 15-minute, right? So if we extend the 15-minute, we'll see a couple of, I'm pretty sure we'll see some double entries, some triple entries, right? All of this. So the key here for me here, I just don't want a big stop loss. That is if you guys are not getting that, I just don't want a big stop loss. That is my major thing for these trades. Because for example, previously, like for gold, if you guys have followed me for the last 4 so months, I started off doing like 100 pip stop for gold. Then I went down to doing a 50 pip stop on gold. Nowadays, I'm doing like a 20 or 30 pip stop, especially with this strategy, because it has like it can give you a nice 1:2, like easily and quickly. So it's just like over the months, I've just, and I mentioned to you guys, like one thing I always struggle with, or I was struggling with, is risk to reward. Again, when I first started learning to trade, I was trading under somebody who had a negative risk to reward. So ideally, he would like risk 3% to make 1%, which means that if you lost a trade, it would take you 3 winning trades to come back to that. So over time, right, and you guys have seen it on the live session, I grew to give you guys entries that were mostly 1:1. And then I did let you guys know that, one thing I've been working on is to improve my risk to reward. There are people who do like 1:3, 1:4, 1:17, 1:13. So, and I think having, at the bare minimum, you should have a 1:1, but the higher the risk to reward you have, the better, especially if your win rate is high. So that's just a personal thing to myself. So for this particular trade, if I was trading way back, I could have entered this trade with a 50 pip stop and 50 pip TP, right? This is a trade I would have been comfortable with. But right now, since I am trying to minimize my stop loss and maximize my risk to reward, this is the setup that I'm looking for. And for me personally, that tells me this area right here is the best area that could have given me the entry. All right, so yeah, the next hourly time frame, if we do get that, so right here for US30, I am looking for the same setup here. So if you can see these tweezer tops on EU, the ones that were based off of that sell, that's exactly what I'm looking for US30. So I'm looking for this hourly candle to come back in here, hopefully test the whole zone. So I would want it to test this whole zone and reject downwards. So that's what ideally I would want US30 to do. And then at that time, 50 minutes from now, I'll come down. So if the trade, so for example here, if US30, so same idea as EU, is if US30 closes here, and let's say my stop loss is there, I would want to wait for another retracement. If US30 closes like there, I would enter on impulse. So the closer the entry candle closes to the SAR zone you're trading, in that instance, you can trade on impulse. But the further the entry candle closes from your SAR zone that you're trading, it's probably advisable to wait for that retracement so that you can get that nice entry. So that's what I'm waiting for US30 in the next 50 minutes. If I do get this trade and if I do enter the EU sell, I will send it to the group. But right now, I don't see any entries for any instrument right now based off of how I trade. Now you guys can ask me about other instruments. You guys can ask me, can I enter this on the 5 and 15-minute time frame? Sure, right? I can answer those questions for you. But personally, based off of how I'm trading on the 4-hour and 1-hour, looking for entries there, I do not see any entries currently. Let's see. Also, in these instances where you're waiting, where a trade is valid, so for example, this EU sell is valid, right? So if you're waiting for that retracement up here, now this is one option, this is one entry, you can use a pending order. So like, for example, if you set a pending order at like 1.091, that would be valid because again, the trade is valid. The ones you don't want to set pending orders for is, for example, you see this candle, this second candle. So for example, if I replay this, if I replay that, go to the next candle. So this hourly candle closed, did I close that? So this hourly candle closed and ideally tested and closed down. So if you're still bearish on EU, again, you don't want to set a pending order before you get this confirmation of the second candle. Sure, if you set a pending order right here after this first candle tested and came back down, you could have set a pending order up here and you could have got tapped in and you would be in profit. However, right, this second candle, the entry candle, could have easily blasted up and you'd be in drawdown. So always do, what's the probability of something happening? So remember, you will always be or have safer entries if you wait for proper confirmation, whether that comes after 4 hours, whether that comes after 8 hours. You will always have a better trade and it's going to be better on your psychology that way. Because for example, here, if I'd set a pending order before I got the confirmation from the next hourly candle, yes, right, I would be like, okay, I'm in profit right now. But let's assume this test candle or rejection candle, instead of rejecting from this sell SAR right here, it blasted through. And that can happen. As much as we are bearish on EU and gold, EU can literally push up, gold can literally push up. So keep in mind, no strategy is 100%. So if somebody had set a pending order right here and because they didn't wait for that confirmation of the entry candle, and that they got tapped in and they went so far into drawdown and maybe hit stop loss or blew their account, they would be so mad at themselves because you'd be like, okay, if only I had waited for that candle to confirm my entry. So that's why for me, I'm big on confirmations, because I would rather lose a valid trade than win an invalid trade. Because if you start winning invalid trades, that's what propels FOMO, because you'll be like, okay, I won last time just jumping in, so let me try and jump in again for this one. But if you're always waiting for that confirmation to happen, as much as, for example, for me right here, as much as EU can go straight into profit, I'm not going to feel bad that I missed the trade. You know, I'll just journal and say my strategy SAR is still working, so the fault wasn't on that. Okay, maybe the fault was on my entry. So maybe next time I do, maybe if I'm risking 0.5% for this trade, maybe I enter the first trade as like a 0.25%. And then if the trade comes back up to the area that I was expecting, I add another 0.25%. In this instance, let's say this 0.25% goes ahead and hits full TP. I end up with a 0.5%. You see what I mean? So there's so many ways you can improve your valid trades even when you miss them, because you can always, instead of jumping in with the normal lot size, you jump in with half the lot size you normally do. And then if you're expecting a retracement, you start scaling in and then you're good to go. So those are just some of the things you can start looking at. But anyway, that's what I'm waiting for. Unless you guys have any questions for me, that will be it for the day. And if I do get this entry, actually, I'll send them in the Trade Ideas channel right now. But if I do get them, I will send them in the group that I've entered them. Give me 1 second. Let me mark this up.
I wasn't connected, Michael. Did you say something about gold?
No, yeah. So for gold, personally, I'm not taking any trades for gold so far, because I don't have any entries on the 4 hour and 1 hour. But gold is bearish. I am bearish on gold, on the daily time frame. But for me to enter, because my entries are based off of the 4 hours and 1 hour, I do not have any double SARs on the daily. I'm sorry, on the 4 hour or the 1 hour. So gold, I don't see myself taking any gold trades today.
Thank you.
Yeah. Also, Audrey, I don't know if you saw, I updated all the indicators so that you can select the SAR zones you don't want. So if you're interested in the red ones, there's a checkbox at the bottom for you to check that. And if you're only interested in the green ones, you can select that checkbox.
Yeah, I saw the email. I checked that.
Okay. So here. Now keep in mind, if this EU trade, so keep in mind that is the valid trade right there, but I'm not in that trade. But if this trade goes ahead and hits full TP, when we get that retracement, do not take that trade. So keep in mind, right? If, for example, this trade, based off of how I'm marking it up, if this trade goes ahead and hits full TP, don't re-enter on any retracement, because by the time EU is coming back up, it might form like a daily buy SAR zone. So just keep in mind this one that I'm waiting for, this one that I'm marking up, this trade that I'm waiting to enter right here. It's only if we get a retracement. If EU keeps dropping, then of course this trade will be invalidated. Back up to tap into this double SAR injection zone. All right, so I'll send this in the trade ideas.
So bro, so do you know when we say the double SARs, the two candle closures on the hourly with the trend lines, does it have to reject off one of them? Like the first candle has to close, the second one doesn't have to reach
Wait, you say trend lines. So do you mean trend lines or SAR? Because those are two different things.
Both. So when you're looking at the hourly, with you use the trend lines for the bias, right? So the
No.
SAR.
I don't use trend lines for the bias. I use the daily SAR for the bias. On hourly, sure, I can use the hourly to tell me my hourly bias, but I'm not looking to, because you remember the one day the daily bias was telling us to sell and we took a buy based off of the trend line and we got burnt on gold. So nowadays I don't look, yes, I still draw my trend lines, but I don't look at the trend line. So here's the thing. And I told you guys this with the SAR, do not try and combine it with any other strategy. You will mess up. I messed up a lot. I made a lot of money, but I also lost a lot before I started making the money. So for the SAR, that's why you don't see any other indicators on my chart other than this lower whatever. Until you can understand the SAR without even blinking or whatever, without even questioning yourself, do not try to tie the SAR on to the trend line. Do not try to tie the SAR to the order blocks. Do not try to tie the SAR to the supply and demand zones. First, understand the SAR by itself, and then from there, start tying it slowly to trend lines and whatnot.
Oh, I see.
Yeah. And again, here's the other thing, that let the daily bias always guide you. So let's say right now, our daily bias is a sell. So for example, right here, you can see on gold, sure, gold is rejecting. So in this instance, gold is rejecting from this upper trend line. So in this instance, gold even on the hourly trend line is a sell. So in this instance, the hourly trend lines and the daily bias are lining up. That is good.
Yeah.
But you will have days. So for example, right here, you'll have days when gold closed above this trend line and then on the hourly, and then it retested that trend line and closed above. Somebody could have said, right, this is a buy. So depending on what your stop loss was, you could have either gotten your stop loss hit by this retracement, or you could have had your take profit hit. So first understand each by its own, because here's the other thing, like this morning, Desire had mentioned we did have an entry on gold on the 5-minute right here. No, not markups. If we go to the SAR and I go down here, turn off the red lines, turn on the green lines. This was a buy on gold right here. This was a valid buy on gold because here you have these double SARs right here. You have this test and rejection. This was a valid buy that could have been ideally no drawdown. Now for me, yes, it was a valid buy. And also yesterday I did see a reversal on gold, but for me, I did not take it. This was a valid reversal, right? Because keep in mind, using the reversal indicator, right? Area of interest is right here, 150 pip threshold for gold right here, 150 pips.
But we were in a downtrend for a long time, isn't it? So the 150 threshold was already passed a long time, isn't it?
No. Keep in mind, you're looking for price to continuously remain below the 9 EMA. And this is also another reason why I gave you guys, for all these indicators, there's an option to color the candles based off of the position of the 9 EMA. So let's even take off the 9 EMA right here. I think it's right here. So I can visibly see a trend right here. So as much as here we were in a downtrend, this, yes, is a downtrend, but look at this recovery. So you're not seeing consistent red candles as much as we're in a downtrend. So you can see this one right here, for example, is a downtrend. But compare that to this one right here, which is why, right, I gave you guys, every indicator has the option to color candles based off of trend. So this should allow you to see a clear trend. So here, yes, it was in a downtrend, but look at all these recoveries with the green candles. Same thing here. Yes, we're in a downtrend, but look at all these recoveries in the green candle, using a green candle. So this is another reason why I gave you guys that. So for me, remember, always, if you ask me about a downtrend, if we've been in a downtrend, give me the time frame and I'll go to that time frame. If I find candles that are closing in and out of the 9 EMA, whether it's on the 5-minute, whether it's on the 9, on the hourly, whether it's on the daily, whether it's on the 4-hour, I will tell you, to me, that is not, yes, it's a trend, but it's not a trend I would use to enter using the reversal indicator. So you can compare this, whatever I just showed you. Yes, this is a trend right here. This right here, yes, is a trend, but look at the amount of times gold was closing above and below the 9 EMA. So keep in mind, it is a trend, but that's not what I developed my indicators based off of. The indicators like this one, I developed it for price to stay consistently above or consistently below the 9 EMA. So that's why for me, as much as we've been, I haven't taken any reversal on gold. I've just been using the daily bias. But for here yesterday, this was a valid reversal entry based off of how I developed this indicator, because the area of interest 1905. Okay, gold consistently stayed below the 9 EMA for that 150 pip threshold. So I did mention, yes, sometimes you'll have these zones right here where it recovers, but those, right, so long as it's not consistent. So you see the difference between this and, for example, this. So this one right here, how many do you have? And this one didn't even meet the 150 pip threshold. So this trend, for example, it has those. Okay, the threshold 1910 to around 1901. That's a 90 pip threshold. So again, keep in mind, this threshold right here is very important for you because it's telling you, unless gold consistently trends like this with price being below the 9 EMA for most of the time, that is your threshold being met. So for me, like, I think the reversal indicator to me is one of the easiest to use because it's so clear, because you have the indicator itself, but you have the manual interventions that you draw here. And trust me, if you draw this, if you question yourself, do not take that trade. But some of these entries like this one yesterday, which is why we haven't had a reversal entry in gold for a while, but this one was so obvious because it met the 150 pips compared to this one. This trend was only 90 pips. So I wouldn't even look at this for any entry on gold. This one as well. If I was trying to take, for example, this one, because I can see a downtrend from here, the threshold itself, 1912 to 1902. I wouldn't even try to take that because that's where we even started having any sort of recovery. I wouldn't even have taken that entry for gold in any way. And I can tell this is a new candle as well. So these ones will always stand out to you. Like, so long as you draw that threshold, it's not just about looking at the chart and saying gold has been trending down. The question will always remain, where do you enter the buy? Where do you enter the sell? And this, drawing your area of interest, drawing this threshold markup right there will always tell you it's safe now to enter your buy, it's safe now to enter your sell. But anyway, so for example, this one right here was a valid buy on gold yesterday, and I did see it even before taking it, but I didn't take it because for me, I haven't mastered the SAR strategy completely, and I'm not going to enter anything else. I'm not going to use order blocks. I'm not going to use supply and demand until I can understand the SAR without even thinking. So yes, this was a valid trade, and Desire also posted that. If you went to the 15-minute time frame and you're only looking for buys, you could have entered the buy here. So the idea here is that these SARs will give you both buys and sells. But make sure you do not get confused, because for me, what I found when I was trading both buys and sells, I was getting more and more confused. So until I can understand how to trade SARs in the daily bias by itself first, then I can start coming in and saying, okay, let me tie this to a reversal indicator. Okay, then I find a reversal entry like yesterday I could have taken, and I take it, I go straight into TP. What you do not want is for you to keep getting confused, and then you're like, okay, is this valid? Is this not valid? So if you haven't understood the SAR, do not look for anything else. Do not look for anything else. And if you haven't understood the SAR and you think it's not something for you, keep working on the others. Work on the reversal. Work on the breakout scanner. Work on the crosses indicator, right? If none of these indicators work for you, then again, right, find something else that works for you. The key thing is that you always find that one thing that works for you, that you don't even have to worry about it. You can see entries just again, without putting too much effort. So again, that's my advice to you. That's what I do every day, and it's been working for me. So just process of elimination. This is not working for me, leave it. Don't even come back to it. This is not working for me. But if you see that, okay, I can see how this can work for me, let me follow that. Let me study more about it and see how I can develop it to align with my strategy. Yeah, so this EU, not sure I'm going to get this EU trade. So I think the only trade I will get at the end of 35 minutes is this US 30 trade. But that's all. That's all for now. Any last questions? Hey, Marcus, I haven't seen you in a minute.
Hey, how you doing? Yeah, I've just been a little busy.
Yeah, no, I feel you.
Yeah, how you been?
I've been good. Been good.
Yeah, I thought I'd catch the end of the stream here.
Yeah, you've seen the new SAR setups, right?
Yeah, I've seen a couple of videos on it. Haven't actually tested it out myself, but
Okay.
probably gonna back test it a little bit.
Yeah. So all
See if I can do it.
all indicators, if you haven't refreshed your indicators, you should have the option to uncheck the green and red lines at the SAR, so you can check that as well. And also, if you check the trade ideas, so in trade ideas, I've been sending trades, so they're not the only official trades I send, of course, are like in the indices, commodities, and forex majors, whatever. But in trade ideas, I mostly send it for educational purposes. Oh, I already posted that. So if you go to the trade ideas section, like I send markups, and then I ideally type in what I'm looking for and the reason I'm looking for that, whether it's a double, SAR, triple, and all of that.
So when you have a trade like that example right there, and you're looking for the retest off the SAR line, and then so you're looking for an entry on the 5 or 15 minute?
Correct. Yeah, because
are you just looking for like a break of structure on that time frame, or what are you just looking for? Okay, 5 minute, hit the double SAR line and reject it on a candle.
No, so remember, for me, it's always 2 candle closures.
Gotcha. Okay, so you just go to like the 5 or 15 minute 2 candle closes and rejects off that line.
Yeah. So for example, like this, like this EU trade, this was the entry right here. But personally, I didn't feel comfortable taking it on impulse. So it is a valid trade, but like I like taking when the entry is close to the SARs I'm trading, because that gives me a nice tight stop loss. So if the entry candle is a bit too far off from the SARs you're trading, for me, I normally wait. So in this instance, like because this is it's a valid trade and it's on the hourly, if EU comes back here. For me, since the trade is already valid, maybe I don't even have to do the 5 minute. I can go to the 1 minute because I'm looking for that instant entry. So here, when a trade validates and it's on the hourly and 4 hour, you can either do two things. You can wait for price to retrace up there, or you can set a pending order, but never set a pending order if the trade hasn't validated. Yeah, but here, like this EU trade, that was the entry right there. But personally, how I'm trading it, right, I don't want my stop loss, because here my stop loss is 25 pips, and you can see the SARs I'm trading are like 15 pips already. So that would be like 80% of my stop loss. So I'm not really I wasn't looking to take that, but I think this US 31 will get, because this is the hourly time frame, we have double SARs here. This would ideally fall as a test and rejection because the sell SARs are to the upside. So, and I do hope, like, for example, with this US 30 trade, it doesn't do what EU did. So I'm hoping US 30 closes somewhere above here next to those SARs, and I'll then enter US 30 there. So for example, US 30, this one I would be doing 50 pips. And then 100 pips TP. So that gives me a nice 1:2 risk to reward. But anyway, we'll see. We'll see how that goes. All right. Anybody else with anything? Let me send this to the trade ideas as well. Possible.
If it closes without penetrating, you're gonna enter like this hour, right? But if it penetrates, you're gonna wait for the
yes, okay, for the next and the next. Possible double.
So, bro, the single SAR and double SAR, what's the difference? Like when there's one, yeah.
It's like the difference between when you have a 4 hour and 1 hour OB and a 1 hour OB by itself, right? So it's probability. Yeah. So I used to trade when I first backtesting. So this strategy is only like a week old. So when I first started backtesting, I was trading the single SARs. So if I was trading how I was trading last week, I would have entered this sell on gold right here, because this is a sell entry on gold. Yeah. So it's ideally probability, because keep in mind, when you extend the lines, you're bringing the historical SAR zones forward. So that's what gives you a double, that's what gives you a quadruple, that's what gives you a triple SAR. Yeah.
What was that again? Okay.
Oh, if you extend the lines, that's what gives you like a double, triple, and quadruple SAR. So it's all about probability. So if you find where price is, you have a single SAR, mostly that means you're trading the most recent SAR to that based off of the color. But if you find yourself with, for example, double SARs and triple SARs, so let's assume you find right here, triple S, this I think is double. So this means we are trading ideally the last two sell SARs, historical SARs. So, and again, here's a third one right now. So you can see, if you drag, you can always see the candle that created an SAR. So for example, here, this single sell SAR, you can tell that it's this candle that was on Wednesday, 16th August, yesterday. That's the candle that created that single SAR. So which is why, so for example, right here, we go on the daily time frame, like how I use the daily bias. That's why for me, I'm only interested, using the daily bias, I'm only interested in the single SAR and the current SAR. So for example, here on US 30, let's assume I extended the lines like I've done on the 15-minute and 5-minute. Oh, I'm sorry, like I've done on the 4-hour and 1-hour. If I extend this, and 500 is the limit you can extend on TradingView, you can see extending does two things, or does a couple of things. One, makes the charts messy, and also makes too many markups that can confuse you. But right now, let's assume, since I'm already biased. Okay, so here's the other question, right? If you extended this entries for US 30, you can see our bias has been selling for US 30, right? But you can see if you extend the lines, we still have even double SARs at times, double buy SARs for US 30 on the daily. So this can confuse you when you're looking for the bias. But let's assume
this is the thing. Yeah, you know, on the daily, how the green lines, the buy SARs, they're conflicting with the red ones.
Yeah,
I know that's where it's gonna confuse you. So
yep.
in this case, well, you just have to shorten, isn't?
Yeah, in this case, don't extend. So just use the default. So use the default and then use the current one. So which is why right here, how do I find the daily bias? I look for the last daily closure of an SAR level. So here, what's the last daily closure of an SAR level on the daily for US 30? Bearish. Same thing for gold. Same thing for EU. For the DXY, the US dollar is bullish. But if I were to extend on the daily, how would I even start looking at the bias, right? I would be confused, as you said, right? So if I extended that, I mean, I'm pretty sure there's probably a way, but maybe I start looking for the double zones. But so here, for example, if you say, okay, I'm going to extend the lines on the daily, and then to find my bias, I'll only look for the double zones. So sure, here, yesterday you could have had that double SAR for the sell on the daily, but keep in mind you would have missed all these sells that we've been taking this whole time US 30 has been retracing up. So for me, I just find it on the daily, it's just easier. Don't extend the lines on the daily if you don't see a need to. So just on the daily, just leave that as 5 and then just stick to the current one. It's more cleaner and it gives you more confidence. So you look at this, sells only for gold this whole time. EU, same thing, right? There were people who are expecting the recovery of gold today. For me, I was just selling gold. Like, well, the one I've just been entering manually and the one I mentioned, if you guys have like, because I know some of you guys use robots, just set gold to sells only until you get a buy.
What's it called? On the daily, daily SAR, the daily candle will have to close. One daily candle would have to close above for a buy, right?
Yep.
On the daily.
Yep.
Right?
So advising, the reason I don't use the trend lines unless it matches the daily bias with the star strategy. That's the only reason I use it, and that was a perfect situation. So that's probably took it.
Yep. Yeah, and you're right. Even for me, like the days the trend lines match the daily bias, I make good money. But I found when I was back testing and the trend lines were the hourly was telling me to buy, like that day we took the loss right here on gold. We bought gold. Actually, no, it was EU. It was actually EU and gold. We bought EU and we were spiked out so fast and EU continued dropping. Yeah. So I love the days when I can see the trend line is matching my bias. Like for right now, the gold trend lines on the hourly are matching my daily bias. US 30 trend lines, US 30 right now is in no man's land regarding trend lines. EU is coming back down, rejected off of this, didn't test this trend line exactly, but it's coming back down. So you can see it's rejecting back down. And as much as you start using all of this, like for example, what this SAR has shown me is, if it was way back, guess what I would have been doing this whole morning? I would have been buying gold, literally, even US 30, because I would have been like, look at this whole drop for US 30. So guess what I would have been doing? I would have been buying US 30 this whole morning and I end up being up like 500. And then guess what? The rest of the day, my drawdown goes to like 3K or something, or I end up blowing my account. So one thing this SAR has taught me is that, in the past, because I didn't, of course, I can't backtest how far back I was trading in the past, like 5 years ago or whatever. But I'm pretty sure when I was buying US 30 at what I thought was the bottom. Like this time, and Audrey can tell you, we have amazing stories with Audrey. We used to think US 30 cannot go lower than that, but we used to keep buying and buying and buying. Before you know it, you've already blown an account. But I'm almost sure if I had this indicator way back, the days that I was thinking that US 30 has dropped so far down and I keep buying and getting and blowing accounts, I'm pretty sure the daily SAR was showing sell. So this is why, right, this morning I did see that pump up on gold. I did see that pump up on US 30, but I never changed my bias for gold. I never changed my bias for US 30. I was still bearish, and you can see how both of these instruments are coming back down. So if you use this like after a week or two, you'll see that you're taking trades that most of the retail traders are not taking. So you'll see that you're looking for buys when most of the groups you're in are just trying to sell. And at the end of the day, you see that your buys are hitting profit and their sells did not really go into profit, if that makes sense. And of course, there are days that you're going to lose. Again, nothing is 100%. So that's the key. The key is to backtest this and see, okay, like if we backtest this one for, let's even do Bitcoin, right? We don't trade Bitcoin. So let's do Bitcoin or GJ, GBP, JPY right here on the daily time frame. GJ, the last SAR it crossed on the daily was a buy SAR. Look at what GJ has been doing. I'm pretty sure there are people who are just selling GJ. Okay, here, yes, it sold on the daily and you could have been entering sells until you got the reversal. So the key thing with the daily, your bias should remain that way until, so let's say here you get into sells. Sure, it looks like you could have gotten burnt, right? In this daily candle came back down, closed here. Maybe you could have made some little bit of profit depending on the direction you're trading or where the entries were, but maybe you could have made some losses here on this move back up, and then here it closes on the daily, it starts buying. So keep in mind, what the daily time frame is doing, never enter a trade when the daily confirms a bias. What you're looking for, if, for example, right here, and I've mentioned this in previous sessions, if the daily, so let's say I was trading GJ here on this day, and we got a daily candle above this. Now, my bias, your bias is not telling you where to enter a trade. Your bias is only telling you, look for trades. So think of, so here how I would have interpreted GJ telling me is that, okay, I've closed above a buy SAR on the daily. So right now your bias is bullish for GJ. However, I am not an entry. So I'm not telling you to buy immediately then the beginning of the next day. What I'm telling you is that go on the 4 hour, go on the 1 hour and look for double SAR buys for GJ and use them to write price up. So you see this retracement that came back down this way. So what this was doing as they were pushing GJ up, they were leaving those liquidity zones down here. So consider the double SARs, the triple, the quadruple as liquidity zones. So as they were pushing GJ up, they were leaving those liquidity zones. And yes, they closed up here. So your bias is a buy. So when you got that buy, your job is to now go down to the 4 hour and go down to the 1 hour. And if you're looking at it, you'll find the double SARs, some double SAR buys at the bottom and also at the top. So you mark up those double SARs on the 4 hour and 1 hour, and then wait for price to come in and tap you in. So the same thing, that's why for me, I use the 4 hour and 1 hour to identify where can I enter the trade. So you come there, you enter your trades, and you could have caught buys. I'm pretty sure in this zone, you catch buys all the way up. And right now, you'd have been, right now, let's go to GJ on the 4 hour time frame. So on the daily, I know that GJ is bullish. So right now, I would come to the 4 hour right here and look for my double buy SARs. And since this is the 4 hour, I extend the lines because I'm looking for those double zones, double and above zones. So for here, I know for me to buy, so long as GJ remains bullish, this is an area to buy GJ, this zone right here. Another double SAR is right here, the 4 hour. Then I come back to the 1 hour as well and do the same thing. Look for the double on the 1 hour. So I'm not buying GJ right here blindly, right? And here's another one, another buy zone on GJ on the hourly because we have a double SAR. But for me to buy this, I need 2 candles to close above it. So remember, for me, it's always 2 candle closures. Okay, I go back down on the hourly. I really don't have any other double SARs other than down here. So you see what you're doing here, is you're not chasing the price. Yes, the bias is bullish, but GJ can start reversing right now. So what marking up your entries on lower time frame does, it tells you, okay, yes, we are bullish, but these are the areas for you to enter buys. Don't just enter buys blindly, of course, unless you're using an EA where you just set it to buy or sell only. But if you're trading manually, wait for price to come to these zones, and if it gives you confirmation, go ahead and enter. So so that's how you use the daily bias, and then you come down to the smaller, the 4 hour and 1 hour to find the areas that align to your daily bias. So hopefully that little demo makes sense. And again, don't use the SAR. Don't tie it to order blocks for now. Don't tie it to the breakout scanner for now. Just understand it, because the goal here is to compare. Like for me right now, I'm doing fine with the SAR by itself. Again, not to say that the crosses is not fine, is not good. Not to say that the whatever is not good. You know, again, for me, I don't like trading with signals. I just prefer learning by myself, such that, oh, you know, who's to say the breakout scanner is not going to break? Who's to say even the SAR itself is not going to break? So it's ideally getting as much information as you can from the market. And then, you know, there are days when the SAR is not going to work. Then maybe I can go to the crosses. Maybe I can go to the breakout scanner. Yeah, so this one right here, I'll change this back to not extending. No, not that. Should be 5. All right.
So,
New indicators ready?
The new one, which one?
The one with the buy and the sell lines.
For the so this is it. Yeah, this is it. It is ready, but honestly, the entries are not how I would want. When we try to get,
not this one, the one that you can check off the red lines or green lines.
oh yeah. So if you remove, so your indicator should automatically update. If it hasn't, go remove your indicator and reapply it. So you'll see this. So you see, like for example, this, you'll see the green line and red line right here, like I'm showing. And this is in all, right, in all indicators. So even in the breakout scanner, you have the red and green line right here. Yeah. Yeah, I just published the changes this morning. So it should be ready. All right. Any other questions?
one more thing. The 4 hour, right? The 4 hour. Sometimes, like on the 4 hour and the hourly, the SAR zones might conflict. Like it might show you a buy SAR on the 4 hour, on the hourly showing you something different.
Yeah, I mean, yeah, because they're different time frames. Because a 4 hour candle has 4 1 hour candles.
Yeah. Yeah. So yes. On that, yeah. So on GJ, for example, when you were doing the hourly 2 candle closures above, like right now with the 2 double SARs, if you got 2 hourly candle closures above, you then come down to is it the 5 minute, right? The 5 minute.
Yes. You'd either, so it depends, right? So the only times I come to the 5 minute is if, so EU right here, if EU had closed next to our SAR, I wouldn't have come to the 5 minute. I would have automatically entered on impulse. The reason I come to the 5 minute is if the entry candle, for example, this was the entry candle for EU. The entry candle was so far, in my opinion, again, that's relative. In my opinion, the entry candle was 80 pips away, or 80% of my stop loss away from the SAR zones. So if this red candle right here, this red candle for EU, that was the entry confirmation candle, had closed here, I would not have gone to the 5 minute, because right, the reason I go to the 5 minute, if I ever go to the 5 minute, it's because my confirmation on the 4 hour and 1 hour, the price is so far, in my opinion, so far away from the SARs that I'm trading. So remember, you need to know what your stop loss is. So for example, for somebody with a 50 pip stop right here, they could have easily entered on impulse, because 50 pips is so far away from this. But for me, who's using a 25 pip stop or even a 20 pip stop, look at how my stop is so close. So that's the reason I only go to the 5 minute if the entry candle has closed so far away from quote unquote far away from my SARs. But if my SAR, if my entry candle 4 hour or 1 hour has closed like 2 pips away, 5 pips away from the SARs that I'm trading, I'm not going to go to the 5 minute. I'm going to enter on impulse.
Okay.
Yeah.
That's you, bro.
All right. Last questions, and
Not
this is
showing up for me when I the indicators.
you say what?
It's not showing up on the indicators for me. Should I just delete all of them and go back to the invite?
So one thing yeah, you should remove all of them and go back to the invite. Also, are you using the browser or the app for TradingView?
I'm using the browser on my Mac.
Okay. Yeah, just close the browser and then so remove the indicators, close the browser, and then go to the invites again and apply it. You should see them.
All right.
Yeah. All right. Any other questions? So same thing, right? You see what's happening with US 30 right here on the hourly. If US 30, if this hourly candle closes here, I'm not going to enter on impulse. I'm going to leave this entry here, wait for the 5 minutes, look for the 5 minute entry, and then I'll find it. But the 5 minute entry, I need to get a retracement. I need to get a retracement, and then when it retraces and they start trying to sell, it's going to create a sell SAR on the 5 minute, and then I'll wait for a break and retest of that sell SAR on the 5 minute. So for me, right, going down on the 5 minute or 15 minute is if the entry has been confirmed and it's ideally far away from the SARs. So that's ideally what I would do. But again, keep in mind, there's 2 ways to do that. You don't have to wait for that. But the key thing is, if you don't want to wait for that retracement, do one of 2 things. If you're risking 0.5% per trade, like here, I gave the example on EU, 2 things you could have done here for EU, because the idea here is that you do not want to get faked out. You're trading in the direction of bias. You have a high probability of your trade winning. But how big of a stop loss do you need to avoid getting faked out? So you could have done one of 2 things here for this EU trade. Trade is valid. Okay. So 1, you could have decided to take the risk, go for the 250 pip stop. 25 pip stop, 50 pip TP, and right, hopefully it goes in your direction. That's one way if you're willing to take that risk. Second way, if you're not willing to take that risk and you're risking 0.5%, enter the first trade with 0.25%. And then if the price reverses, go ahead and scale in as price is reversing back here. Scale into your full, the remaining 0.25, and hopefully price comes down in your direction. That's option 2. The best thing with this option, even though you enter with 0.25% risk, and you don't get a chance to scale in and trade goes ahead and hits full TP, you gain 0.5%. So that's good. The other option is, okay, you want to enter on impulse and you want to use your full risk, but you're not willing to use the 25 pips. Go ahead and extend your stop loss to a region that you know can survive a fake out. So maybe there. So this would give you about 35 pips stop loss. So for this one, for you to have a 1:2, this would need to be 70 pips TP, and you go ahead and enter that trade, and then you just ride it all the way to the end. So those are 3 scenarios you can use to enter. Either enter on impulse and take the risk. So enter on impulse. Hopefully your entry is close to the SARs you're trading. If it's not, sure, enter and just take the risk and hope that you don't get faked out. Option number 2, scale in slowly. Option number 3, extend your stop loss above where you would have wanted. But again, for me, with the SAR, personally with the SAR, for US 30, I want to have a maximum stop loss of 50 pips. For gold, I want to have a maximum of 50, but for gold nowadays, I'm able to do 30. So for gold, I want to do 30 or 50. For FX pairs, I want to play around between 20 and 30 pips stop loss. So when I start going higher, like 50 pips and all of that, I just, right, am I willing to hold a trade for 100 pips TP? I mean, maybe not. So it's all up to you guys, but those are the entries, right? So it's up to you guys to work what I've given you, right? Ask yourself, is the trade valid? If it is, how big of a stop loss do I need to survive manipulation? Am I trading in the direction of bias? Okay, then you just decide what you want to do with that.
Okay, on EU, Which one did you say was the confirmation candle? I think
the confirmation candle is this one, right? So you're always looking for two candles, right? So you either, if you're entering a sell, so remember whether it's a buy or sell. So let me start with sells. If you're entering a sell on any instrument and you're entering using the candles, I'm sorry, you're entering using SAR or even trend lines, but let me focus on SAR. So
yeah.
if you're entering a sell and price is above you, same thing with gold or US 30. If you're entering a sell and price is above you, you're entering test and rejection. So what I mean by test and rejection is, for example, here, this candle to the top, you're waiting, you're identifying your SAR, double SAR. So for me here, I'd identified the double SARs. So, and I knew here price was above me. So if I'm doing test and rejection, the first candle tested. So you don't want the first candle to close above those double SARs. You want it to test and close below. Then you want the next candle to do the same thing, to test and close below. So kind of think of it as an M pattern. So it's test and rejection, and you're looking for both candles to close below your sell entry. So the candle that confirmed the sell is this one right here, this bearish candle. Because remember, test, rejection. So that's why I always have those two terms. So test, rejection. If you're trading,
okay. Yeah, no, it's fine. Okay.
Yeah, and then the opposite would be break and closure. So for example, you see how we did on GJ. So it would be the same thing with buys, but I'm sorry, with sells, but the opposite. But break and closure right here, the same thing you identified with GJ. Here, I'm not going to extend these two lines, but these two lines on the hourly, these are double SARs. So for you to trade, since this is a buy and it's on the top, this you'd call it, it's what I used to call break and retest, but nowadays I use the term closure, break and closure. So here on GJ, for you to buy GJ on the hourly, you'd wait break, so meaning the first candle to break and close above those two double SARs, then you'd want the next candle to close above also. So break and closure, so two candles. And then once you get the closure candle and it satisfies closing above that double SAR, you enter your buy for to continue the same. So it's the same logic, whether it's buys or sells, but you just flip it around. So there's always two types of entries: test and rejection, break and continuation.
Okay, so on EU, the first candle was a break and
no. The first one
was
was
sorry, it was test. It was test and rejection, isn't it?
Mm-hmm.
Oh, so those are the two types. Yeah.
Yep. So it's always like where is price? Where is the SAR you're trading relative to where price is? Is your SAR above? Right? Is if you're looking for sells and your SAR is above, you'll get a test and rejection. If you're looking for sells and your SAR is below price, you'll get a break and continuation because it's going down. So the only way you can get a break and continuation is in a buy entry.
Okay. So break and continuation is for buyers only, and the test and rejection is for sells.
No, so break and continuation is for a buy entry that's price is above it. For break and continuation to for a sell to have a break and continuation, the price has to be below it.
You're right.
Yeah, so you'll always be flipping the two terms.
Yeah. So the test and rejection can be for both buys and sells, but just in the opposite direction.
Yes, you're right. Yeah.
See.
All right. What else do we have? Anybody else have anything? I was hoping we get this retracement, but probably we won't. All right, so we have in 3 minutes. So let's see. I'll hang around for 3 minutes and look at this US 30 entry. So right now for US 30, we have 3 minutes. And what we're looking for this 3 minutes is for these candles to confirm the test and rejection. So this is a test and rejection because it's a test and rejection for a sell because the SARs are above where price is. So this is an example here of a test and rejection. So let's assume this current hourly candle on US 30 closes here. That's number one, right? We're just analyzing where can our stop be, where can our TP be. So if this candle closes here, my candle, my stop loss is really not going to be above it. So keep in mind, I want my stop loss to be above here. So if this candle closes, the further down it goes, the higher the TP I would need. So if this candle were to close there, I would need an 80 pip stop. So in this instance, this is the same thing as EU as well. If this candle in the next 3 minutes closes where it is right now, I am not comfortable taking this with a 50 pip stop, because keep in mind, your stop should be above the SARs you're trading. So guess what I'll do? I'll do the same thing as EU. I'll wait for price to come up here. But you can see, even if price comes up here, this double SAR is ideally a wide SAR zone, right? So I would wait for price to come here and go down to the 5 minutes. So keep in mind, the only time I wait for price to come to me, or to go, in this instance, after a confirmation, is when the candle closure, so this candle, the rejection candle, when it closes, the distance between the entry and the SARs I'm trading is above my threshold for my stop loss. So keep in mind, on US 30 for this strategy, I like having a 50 pip stop loss. So for me to have a 50 pip stop loss, this means I might need to enter the sell here. So even in the next 1 minute or so, I don't see this candle closing here. This is the only time I would attempt to enter this sell on impulse. So same thing with EU. I'll wait for US 30 to come back up. And in this zone, guess what I'll do? I'll come down to US 30 on the 5 minute. I will wait for a 5 minute SCR to be broken and closed below, so that break and continuation. And then at that point, so this markup still stands. So what I drew here, this is what I expect. So I would expect them to form an SAR. After they pump price up, they form sell SAR, and then you want 2 candles to close below that. So keep in mind, all about patience. If you want to enter on impulse here, you would need like a 200 pip stop. This is the amount of stop you would need. So this is a valid entry, but you would need 120 pip stop to take that trade. So for me, based off of the risk to reward that I trade with, because it would mean I take a 240 pip TP. I'm not willing to hold US 30 for that long. So again, it's always going to come down to how big of a stop loss are you comfortable with. So you guys do the math. Personally, I will wait for US 30 to retrace up, and then I'll go down to the 5 minute and look for entries there. Hopefully that makes sense. But this is a valid sell on US 30 right now. The question is the stop loss. So for me, I'll wait for US 30 to come here and go down to the 5. Last questions? All right, perfect. So hopefully we get these trades and we make a nice 2%. So 1% on each, that would make like a 2% return. And we should be able to end the week nicely. Let me know if you guys have any questions later. All right, bye guys.